We are into the home stretch. Can we see a Santa Claus rally? Are we actually seeing a sector rotation? So much to talk about. So grab that cup of coffee. Let's get started. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, we are a practicing advisory firm. We provide videos on the markets with actionable ideas, educational videos, now a new series called Straight Talk. So if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. Okay, let's talk about today's agenda. As always, we're going to look at the charts, see what those signals are telling us. The cycles, how is that affecting things? Where are we headed with that? That helps us with sector spotlight, what keeps me up at night, and game plan going forward. Let's go to the big charts. First up, we're going to start with the charts. If this is your first time here, part of our process, we look at the cycles, we look at charts, we look at momentum, and of course fundamentals. But we always make our final decisions on the chart. So the first thing we see here is the monthly view. A couple months ago, I said this is the most important chart that we look at. Why? Because you can see the trend line going back to 1981. Now, what do you see? Failure, okay? And guess what? Two more failures so far. The month is not over. But right now, when you look at this, or if I go below, here's momentum, which is still positive. So what does it mean to you as an investor? It means that this bull market is still intact. Doesn't mean you can have cyclical bears within it, but it does mean right now it's intact. Long-term signal is positive. Okay, next up, let's take a look at the weekly chart. What do we see here? This is what I love about technical analysis. Doesn't lie, right? When you see this, right? Failure, and this is this week. Failure on the weekly chart. We went up to it, went above it on the big surge on Monday with some health news, but again, it did fail. Now, that being said, when I look down here, okay, been a little bit messy with momentum, was kind of going negative. Now it's trying to go up again. I'm going to call this neutral right now. We'll continue to watch it, but obviously that trend line is everything, so midterm view is neutral. Let's look at the daily chart. So this helps obviously in my decisions day to day, but also that trend, which when you look here, right, those trends go down, go up, go down, go up, okay? But there's a couple key things here if new. In the blue histogram is momentum, MACD, M-A-C-D, momentum, okay? And you can see we had quite a bit of it back in April. We don't really have even quite half of it, all right? But what do I look for? Well, you can see we peaked there on September 2nd. You saw momentum go down, then we started going up, okay? And now, here we hit a top again. You can see it right there. Let me clean that up for you. But momentum is starting to go down again. So I continue to watch this. This, of course, signal can flip-flop, okay? It is still positive as of today, but going to continue to watch the momentum, price, volume, volatility, right? That's what I look at every day. I anticipate today, Friday. Yesterday, we had big volume. Friday, I bet you we're going to see a couple things. First off, we're going to see low volume, okay? And the other thing we're seeing is down here, which is most important also, volatility. Remember, 25 to 30 is caution. We did break that, okay? We went below 25. We're 24 and change right now. We're still in that zone, right? Above 30, uninvestable with the VIX. Right now, a little bit of a caution. Continue to watch that, but it is positive short term with a little bit of a sign we're going to go a different way. Okay, so last thing here, when you look at this chart, right, and I've been talking about this disconnect in the market. So here we had, I call a flash crash, okay, and the market soars on what? What? Is it earnings? I don't know about that. Let's take a quick look at that picture. So here's Larry McDonald on Twitter, S&P earnings, consensus estimates, okay? At the beginning of the year, 193 earnings for the S&P, 124, which would be 25 times earnings. You can see the rest of the numbers. So we started out at 193, we're down to 124. Now this is through yesterday, 459 companies reporting. We're negative 8.44. So when you hear better than expected, that better than expected is because estimations have been brought down big time, okay? So let's take it one step further. Year to date, we peaked. This is GAAP earnings, generally accepted accounting principles, real accounting. We peaked. Earnings going down, going down. We're actually at 99.23, okay, dollars per share of the S&P. In that time, you see where the market is, okay? That's the S&P there. Here's your market, 10%. Earnings down 28.33%. See this? That's the divide I'm talking about, right? How can the market go up and earnings down 30%? That's why we buy equity. So how bad is it right now? Over the long term, 15 is your average. That's fair value. 10 is undervalue, and 20 is, of course, much higher, overvalue. So when you look at 15, fair value, here's where we are today. Need to update that from last night. Go all the way down. Fair value right here is 1984, which is 57% from where we are today. Think about that. Not saying we're going there, but that's how you have to look at the market and how it is so overvalued, okay? So the big question, the rotation, the biggest dispersion ever we heard on Monday and Tuesday. Slow down, folks. We're not there yet. What do I have here? I have S&P value relative to the S&P. Basically, you divide it, okay? Pretty definitive line. So what this tells you, okay, is that value has underperformed big time year to date. Yes, we had this spike on Monday, but then we're coming down again. So I think it's a little bit premature to talk about this big rotation, okay? Couple other areas I'll show you real quick. This is NASDAQ relative to the S&P. As you can see, the NASDAQ has outperformed, seeing a spike right now. So again, that's been consistent. Yes, we've had some hits there. Then I did small caps, which everyone this week was saying, oh, it's time to buy small caps. Again, look, it did come up, but we're not seeing that surge. So I would slow down here on that rotation and see where things take us over time. The last thing has been one of the most interesting pictures the last couple of weeks. We've seen big moves in a treasury market. So here's your 10-year treasury. We've talked about this from our standpoint, right? These were buying opportunities when they hit the high end of the range. Well, Monday, okay, as you can see, we broke above that. So if bond yields are going up, it tells us what? Growth. That's what the market sees. Now, because of some health news announcements on Monday, that's what the market saw, but you've come back. So to me, what I look for going forward, 101, okay? That is the trend for the 10-year treasury. If we break that trend to the upside, then it's time to start really removing ourselves from treasury. I think here we still have an opportunity to go down, maybe not to 0.6, but maybe down again to the 0.7 range. At that time, it might be smart to start taking profits. Next up, Sector Spotlight. Again, if you're new here, when we look at sectors, we look at the cycles. I'll have Andrew bring up a quick image here. We are currently in cycle 3. Cycle 4 means dollars going up. Cycle 3, dollar goes down. Now, we did start to see something here. It failed, okay, and kept going down. It tells us dollar will continue to go down. We're going to see that, especially with additional stimulus, right? and inflation goes up. So how do you see that from an investment standpoint? Commodities is a big place to look. Inflation this morning, PPI. What's the biggest increase? Food. Hello, who doesn't know that, right? So if the dollar goes down, okay, gold goes up. So we still have our gold position, not a full position. We trimmed a little bit, but we're hoping to see a little bit of a push here. Again, watch that dollar and we'll go forward. The other big thing is down here, when you look, that's volatility for gold, which has really come down. You can see the trend line, 18. That is another good sign that I'm looking for as we go forward. But like treasuries, if we hit the high end, I will start trimming. So one thing that has kind of kept us out of this party has been oil, okay? We've been waiting, but we did see a break in trend this week. So we started adding a little bit, just a little bit, started building a position in oil this week. And there's various ways that you can play this, right? Master limited partnerships, price of oil companies, etc. We started with a little bit of the price of oil. Hopefully we'll see how that goes. And just like gold, okay, it has its own volatility, still a little bit elevated, not unusual for oil, but we will continue to watch that. But again, a very small position right now. So I talked about this morning with prices going up. So what is that? Wheat, corn, sugar, right? Agriculture. So I haven't talked about this, but we did have some individual positions in this. Now we just have a basket in an ETF that has agriculture, and you can see what's happened, right? As the dollar's gone down, inflation, price of goods go up, so that's another one, okay? Now, I don't always give away my secrets in these videos. They are for clients only. I will talk afterwards about that. This is one of those scenarios. And I've mentioned that even though we're in slow mode, right? Look at the US, if you go back to that chart, up, down, there's other parts of the world that are in growth mode, cycle 1 or cycle 2. Japan is one of those. So like Japan, right now, as you can see, started a position over here on 1019, did my second buy here, got our signal, and we were very fortunate. Now, that being said, okay, that's relative strength. That tells us that right now, a little bit overpriced, waiting for this to take a breather. This does not look exactly like the ETF, but do like Japan, okay? And there are some other countries. We've talked about China in past videos. This is another one that we have added. So again, there are some other places to make money other than the US with tech, S&P, which has been all but flat since September. Next up, what keeps me up at night? All right, we're into the home stretch here. We've got what keeps me up at night. Don't have a lot this time. We know what's going on in the world. That I'm going to use for straight talk when I'm going to talk specifics. There are some things that the algorithm won't allow me to talk about. But unemployment has obviously continued to be the number one issue. 709, the number you hear, you add into PUA, those self-employed folks, it's still another million, okay, and 21 million. Devastating number, folks. I mentioned last video, we've got 8 million added to poverty since May. More than 27 weeks. Look at this. Look at these numbers. Unbelievable, okay? Not even close, okay? This is the crisis of '08. Not even close, okay? This is reality. This is the disconnect between the market and Main Street, okay? This is something that continues to concern me, okay? Especially with people not being able to find jobs and spend money, which should drive the economy. You know, the next thing, I've been talking about this. I'm not going to go deep into it. So yesterday the Fed comes out. You know, here's the things that are scaring us. And, you know, people not working, mothers not working, kids at home, all those things are good, okay? But we will face some additional challenges going forward. Chairman Powell all but begged. 3 times in his speech he said more stimulus, more money, more dollars, more. I mean, There's got to be another answer, right? We can't keep driving this debt up as we have in the past. We're at 27 trillion, folks. We're expecting to have a 3 trillion deficit next year and additional stimulus. That's scary. I'm going to do a video on that, modern monetary theory and the Fed policy, in the next week. So, what's next? This is a great time of year, right? Take those profits. Nobody has ever gone broke taking profits, okay? Think about that. Raise some cash, do some tax planning. So maybe you sold some stuff at the beginning of the year. This is time to take a look at that. The opportunities continue to be, watch that dollar, okay? Because dollar down, inflation up. We see that in our sector plays with agriculture and oil. But we also see it in China, India, Japan, right? Dollar down, that helps those countries. Volatility Index, 25, right? That's the magic number. 25 to 30 is caution. Above 30, we don't buy. NASDAQ was 40 a couple weeks ago. We're down to 31. Still, both of these are very elevated, so you have to be careful. Follow us for updates. Like I said, I've got this new series coming called Straight Talk. Make sure we keep everyone up to date. Thanks for watching. Michael Loftus, Wealth and Wisdom TV.